Hey, good evening guys, it's Mark here. It's 9:38 here in the UK. We're 20 minutes away from the US close. We're just going to have a little rundown of what cable, gold, Kiwi dollar, the Nasdaq and Bitcoin futures. Please remember, if you do like our content, hit the like button, share and subscribe. And let's take a look. Let's get into the information right now. So we're going to start with cable, which is GBPUSD. We're looking at this on a higher time frame, looking at the weekly. Our analysis coming from Commitment of Traders report highlights that commercials have actively been buying British pound, the futures market, aggressively over the past few months to the point where we expect a bottom to be formed, whether that's against the USD or against New Zealand dollar or Aussie. It just means we're expecting a bottom in the British pound, and we're looking for opportunities to buy that. As you can see, we in previous videos, if you've been following us for a while now, you'll have seen we bought pound a while back at 122s. We've seen the market have a couple of bullish weeks followed by last week giving us bearish weekly candle. If we drop down to the daily, let's just remove these fib drawings right now. I'm just going to remove this so we can look at it as a blank chart. Things to highlight and understand would be, where's the market coming to, where is it going? So first thing we can see, the short-term trend line has been broken and we had an impulsive move, breakout, a pullback, and then we've gone again. We've driven right up into resistance here, and then the market's pulled back. Where we could pull back to, yes, I'll bring the fib back on. We'll just take a look, and if we go up to those swing highs, you can see we've retraced to the 38.2. Preference, I would like to see it maybe drop a little bit deeper into the 124s, around that 50% correction, but also the low of this swing low here and the tip of these wicks through the middle. So ideally I would like to have seen it pull back a little bit more before we get that next impulsive move higher. But obviously we can't choose what the market is going to do and how the market's going to react. So when we drop down, we look at the 4 hour, we can see a real base has been formed here at 124.70. Should the market come back into that 124.70 in around this 38.2 area, we can see, especially if we get this kind of tennis ball effect where you have the big impulsive candles, then you get those very small candles. This will give us a real good clue just from price action alone that the market is potentially about to turn. So we could look at buy stop trades if we see the market starting to consolidate and lose that momentum. But alternatively, we want to start looking at around that 124 even handle for the next opportunity. So I would like to see it drop lower. However, I'll be ready and waiting should we see 124.71. Now, what that means is if you're intraday traders and you want to trade aggressively, then you could look at this as a short-term range between sort of 125.75 and 124.75. Look for any sort of continuations to trade this maybe back down into that structure support. I would have to be dropping down the time frames to maybe try and find some kind of trend based move or somewhere for the market to break out, and I think this would be your zone here. You can see we've had price break up, retest this price point and then move again, and then we've had price come down, test multiple times. So tomorrow, if this is somewhere you're looking, potential wick fill area here, look for the market to break, retest, come into this area, looking for that 20-30 point as an intraday scalp, and then look to hold on and come out around the 125 even handle where we see those impulsive buyers come into the market just there. So that's taking a look at cable. Now gold has played out quite nicely today, especially for those traders that were looking at the clear zones. So we highlighted two areas we wanted to be either long or short above. So long above 156.40, short below, if we got a close below 148.90. You can see the market closed below on this hourly candle. We had the market come down, give us what looked like the market was giving us a rejection, but as you can see the market clearly closed below our previous swing low, and all this was doing was giving us an opportunity to get into the market and trade it back down with this area here as a nice first target. So as it stands right now, we're going to look for the same trade tomorrow because we have this impulsive move here, look at these candles, they're giving us the clue that the market momentum is fading. So any rally and any rejection from this area, I'm going to look to fade. Targets in around this area, and if we can break through here, I will leave a small percentage on to potentially run down in towards that 1830. If you saw previous videos, you would know that we're looking for more downside on gold, potentially as low as 1800, maybe even a little bit lower, just based on the higher time frame analysis, which is, we can see impulse, correction, impulse, correction, and we're looking for that third impulse to come back down, whether we come into the minus 27 here around the 1740, or we're just going to tap into a failed attempt at breaking lows around 1800, and we get a double bottom for us then to look for that next momentum move to the upside. So we've got a few plays here on gold, definitely looking for price to run down to 1830 first of all, and then that will be the cue to whether we get below here and we go down towards 1800 and then maybe 1740. So looking really good. Over to Kiwi dollar. Now Kiwi, a little bit like British pound, has been actively bought by commercial traders, and also the 15th of May is a very strong seasonal buy date for New Zealand as a futures market. We've seen the market rally right now up into that 65.50 area. We've got multiple points of confluence as to why we could see a correction here. Swing low, previous rejection here, rising wedge coming into the 38.2, also horizontal structure from the rejection here, and now we're seeing a potential short-term double top in this area that if we break through this zone here, we could see more downside, which, you know, I'd be happy to snap up. If we see more downside, I'll be looking for those opportunities to trade it long in the not so distant future. But what that means is, if we do break this area, trade where the money flow is going, and that'll be short. So look for the intraday trades. If you're an end of day trader, then obviously you're going to be set on your hands and waiting a little bit longer for the market to give you the opportunity you desire. So dropping down to the 4-hour chart, we can see the rising wedge had broken. We've seen base being formed here at 64.70. Markets come back up and tested that previous swing high, failed. Momentum sellers have come back in, but really to look for any shorts here and continue this move lower, we need to see 64.75 broken. This zone here, we want to see price break. We look for any sort of rally to fade, and we can trade it ideally again in around that 63.50 area, where I'd be looking to take most of the take profits and then look for a potential rejection to trade this market back long again. Moving over to the Nasdaq, we're trapped in a range now. Obviously the market sentiment can flip on a dime, but as we let's go up to the weekly chart and we'll break it down from that point. So we've seen impulse. Oops, sorry guys, let me just draw that back in again. We've seen impulse, correction, impulse, and we're in the start of a correction now. Now, if we were to look at this, we've potentially got this kind of scenario forming. So we could push up in towards that 13,600, or we could just reject where we currently are right now and continue lower. So this is why we have rules in place to stop us from taking trades that we want to trade based on impulsive and emotional decisions rather than logic. So as it stands, looking at the daily chart, we can see clear resistance here at around 12,900 and a nice support level in and around 12,500. So our rules will be, we are going long if we get a close above 12.9, and we're going short if we get a close below 12.5 basically. It's as simple as that. And you know, we will look at the chart, we'll look at the price action, and whatever it trades within this range, if you want to trade the range from the 12.5 to the 12.8, that's your choice. And if you want to trade from 12.8 down to 12.5, again, that's your choice. But just make sure you have rules that identify how you're going to enter that market, how you're going to manage that trade, and what risk of your account balance you're going to place into that trade. So these are all things that you need to know prior to placing the trade. Don't just try and look at it and go, oh well, the market's getting there now, right, okay, I'm going to go short, and you wing it. That's not going to succeed. That's not going to happen. It's not going to make you a successful trader. So ideally, if you're going to trade the market short, you want to wait for a break and close below 12,480. If you're going to go long, you want to see the market break above 12,900 and then trade accordingly. Now Bitcoin, my sentiment is still the same. Yes, we're seeing a rally at the moment, but I see this as opportunity to potentially fade this market. I think we're going to see more downside. I'm going to zoom back out. My previous video on Bitcoin was next stop 24k and potentially 20k. But if you watch the video, you'll see that I talk about this gap here around 36,000. This is the futures market. This is not BTC USD. This is Bitcoin futures. So we've got a gap here. And I said we could potentially fill this gap if we come into this area here, which you can see has got some nice structure. I'll be looking to sell this market, whether we go into the 24Ks or whether we go down to the 2017 highs around 20k. That's yet to be seen, but where price is right now and the fact that we've not seen a big dead cat bounce, buyers aren't interested in my opinion right now. We're not seeing an appetite for buying. So in order to get an appetite for buying, what do we need to do? We need to create that appetite. So how would you create that appetite? And the simple answer is price has to be too interesting for traders not to want to buy. So that means I think we're going to see this. We're going to see a big spike down. It'll kill a lot of traders' accounts, but what it will do, it will whet the appetite for those people that want to get back into the market. And this is what I'm waiting for, price to just have a sudden meltdown, and then I'll be looking for those buyers to come back into the market. And that's going to be my call sign to basically trade. If we go out to the weekly chart, you'll see the reason I've been calling 24k. It's this gap here that has yet to be closed. So we've got to come back down in towards 24k. Yes, we got close, but we haven't seen the market rally like you would expect. So I think we're going to come down, we'll close this gap, and we're potentially going to come down into the 2017 highs. And if we do that, expect the floodgates to open. I expect a huge big wick on a daily, 4 hourly candle, whatever. And then I expect buyers to come in the droves. And that'll be what I'm looking for. So on that note, guys, it's 10 to 10 and I'm going to say good night. And please remember, if you did enjoy this content, give us a thumbs up, share it with fellow traders. And if you've got any comments, feedback, leave it in the comment section below and we'll look forward to trying to assist any of your requests. Good night, guys. Bye bye.